it's definitely an outlier. I think there's some issues with Japan. What's interesting to me, Japan is struggling with high inflation and weak currency. There's an easy fix for that. We know for the last 30 plus years they were dealing with a strong currency and deflation, and there's not an easy fix for that. They need to hike rates. I think they're reluctant to because the economy is sort of vulnerable with the Iran conflict. But I think when push comes to shove, they'll have to intervene, and I think they'll have to hike rates a little more aggressively. They're hiking once every 6 months. Inflation, the headline inflation looks good, but if you look at the underlying inflation, what they look at, the core X institutional factors, it's creeping up towards 3%. So again, it's at some point when push comes to shove, I think they'll have to do the textbook thing and to hike rates.
Back here in the U.S., we've got oil back down to that $70 range. Does that mean our inflation concerns are done? Are we in the clear?
I'd say they're lower,
okay,
but not fully disappeared. I say that because look, I think we're all happy that oil is back to sort of pre-conflict levels, and that it's been 4+ months, but hopefully that has been sort of something we can look through. I know a lot of central banks are. Here's what worries me. You probably have ran stories about the Apple, who raised their prices 20% on many of their MacBooks and iPads, and that's a direct result of the AI boom. We know that AI is taking up a lot of energy. Electricity costs are higher, but we're seeing a lot of issues in the supply chain, especially in the memory chips, all that. So there's some underlying inflation that we have to worry about besides energy, and the Fed's going to be worried about the core inflation.
What did you make of our new Fed chairman? He had his first, statement, and then the first press conference. What did you take away from that?
Well, he's a man of few words. I'll say that. I think that's something that's very old school. I had to go back to sort of the old policy statements from back in the Greenspan days to get something so short. It's short and sweet. He doesn't want to, sort of lead markets on, confuse markets. He wants markets to figure things out by themselves. He's not a fan of forward guidance. I think that's all well and good. I think he did a great job in his first conference. We know that he wanted to make some structural changes in the Fed, but he's doing it in a calm, measured way. We have 5 task force that are starting work. So it's not that he's going to come in, and I keep saying this, he's one of 12 on the FOMC. He can't just come in and be a dictator. So he is starting, I think, a regime change. Look, let's face it. Central banks, not just the Fed, but so many central banks have gotten things wrong. And I think Chair Warsh is actually coming in a thoughtful way and saying, look, this old way is not working. We got to kind of re-examine things.
What does it signal to win thin? I think of your work at Brown Brothers and, of course, all of your academics at Columbia. When Paul and I are bouncing off the wall, one guess, we're going to raise rates. The next guess, we're going to cut rates. And we go back. For those of you on radio, I'm doing the pendulum thing, back and forth. We're at that point where there's a raging debate. How do you deal with that?
Yeah, so I'll bring that back to what Chair Warsh said. He wants the markets to have this debate. He wants the markets to react to the data, not to react to what they think the Fed will react to the data. And that's the underlying. So
what data do you see?
Well, I see high inflation. I see a robust U.S. economy. That's Tom and Paul. That's been one of the biggest surprises to me this year is how resilient the U.S. economy has been through the tariffs, through the oil shock, and that's really sort of speaks to the hawkish Fed. I mean, that June meeting, it wasn't just Warsh. Remember, there are 9 other policymakers that are willing to hike rates this year. Warsh said we're hitting the target. Period. And you're not going to hit that target by cutting rates at this point. So we are on hold. Look, I know, Tom. It's the market's the attention of a flea. But I think my job, and I think most economists' job, is just try and look through the noise and get the true signal. And to me, the true signal is the U.S. economy is robust, surprisingly robust. Core underlying inflation is strong. The Fed is not cutting rates anytime soon. I don't think they're going to hike. I mean, that's a risk for sure. The risks are tilted to the upside for rates. But I think we're steady as she goes. We can talk about the ECB, who probably pulled the trigger a little too early, hiked rates just as inflation was topping, just as the Iran conflict was cooling. We got some inflation data out of the Eurozone earlier today that kind of suggests that was a mistake.
Yep. Labor market seems pretty solid. I guess on Thursday we're going to get the non-farm payrolls. The consensus is 110,000, down from 172,000 last period. What's your view on the labor market here?
Yeah, that's part of the whole surprise about resiliency. I look back, I think we had an average monthly gain in 2025 of 10K a month. I mean, that was weak.
Yep.
We started off January, February a little soft as well, and that's when I think everyone was saying, okay, the U.S. is weakening, Fed's going to have to cut rates, and then we've just had 3 months of blockbuster jobs, which I think the 3-month average is 188K. which is really good in any any environment. So to me, and I think everyone else is asking, is this sustainable? So I think this report on Thursday were very key. Anything with three figures, I think markets will be happy. Yeah. We start getting in double digits, and I think, okay, maybe we could look at this.
I have to do news, which is Bank of Nassau, which is Bahamas, and we all know it's crypto-friendly, crypto front and center. Went thin on the decline in price of Bitcoin from 120-ish to just printing a 58,000 handle, down 2%. Do you have a general idea on that as you look through the prism of the Bank of Nassau?
Well, I can give you just a prism, just as an old-fashioned macro guy, and I think that Bitcoin has not been any of the things that it was supposed to be in terms of investment. It was supposed to be a safe haven. It was supposed to be.
It was a currency. On the Bloomberg folks, there's a yellow key called currency. We spell it to key CURNCY. Bitcoin's under currency. Is it a currency?
In the old-fashioned vernacular, no, it's not. To me, it's a risk asset. Look, you want to throw some money and try and take a punt, great. But to me, it's not a store of value. It's not a medium of exchange. It's not an inflation hedge. It's not a safe haven. It's none of those things. So, I think it's interesting to me. No one's really been talking about Bitcoin for the last 3 months. It's all been about AI, right? It's sort of the next shiny thing. So we'll see. I think the early adapters are fine, but anyone who's coming in at 70K or 80K aren't going to be very happy.
Are you happy? Should President Trump be happy with a 101 DXY, this dollar trend?
I would say no. I think this administration, we wanted, it's part of the whole, I think, bid to encourage and reshore manufacturing. A weak dollar is part of it. They want to bring manufacturing back. They want a weak dollar to make them.
It's not happening.
It's not. For a while during the, earlier in the year, we had higher yields, higher energy prices, and stronger dollar, and that's those three things that they don't want. So, but again, it's to me the dollar is really at this point being dictated by the state of the U.S. economy and the state of the Fed. And to me, I had a weak dollar call when I came in this year, predicated on weakening U.S. But I think
you nailed that.
Well,
and then a war came
I made a couple. I will fully own up to that. Look, again, I think many are surprised by how resilient the U.S. is, and I think everyone is surprised by how hawkish the Fed is. I think everyone thought, Warsh is coming in, he's talking about cutting rates, but it's the circumstances don't call for rate hikes right now.